very warm welcome to the first day of the second week in the month of February. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Agbaragu. It's Monday, the 9th of February. We thank you for joining us at this time on the show.
All right, let's begin with your news now. The Bank of Uganda has kept its key lending rate unchanged at 9.75% for the sixth consecutive meeting, citing an uncertain economic environment as reason for a cautious approach. Governor Michael Atingiego said the current policy stance remains appropriate to support economic activity while ensuring inflation stabilizes around the 5% medium-term target. Let's listen.
The Monetary Policy Committee, MPC, of the Bank of Uganda, BOU, maintained the central bank rate, CBR, at 9.75%. The committee assessed that the prevailing policy stance remains appropriate to support economic activity while ensuring that inflation stabilizes around the target over the medium term to long term amid persistent global economic uncertainty. Inflation has remained below the medium-term target of 5%, reflecting the impact of prudent monetary policy, complemented by coordination with fiscal policy, a stable exchange rate, declining global inflation, and favorable food and energy prices. Over the 12 months to January 2026, annual headline inflation averaged 3.5%, while core inflation averaged 3.8%. Headline inflation edged up marginally to 3.2% in January 2026 from the 3.1% in December 2025, reflecting higher inflation in some core components, partly offset by a decline in food crop inflation. Similarly, annual core inflation increased to 3.3% in January 2026 from the 3.1% in December 2025, driven mainly by higher services inflation, particularly in the passenger air transport. Annual food crop inflation moderated to 3% in January 2026 from the 4.4% in December 2025, supported by favorable weather conditions.
In the meantime, Moody's affirms Ethiopia's sovereign ratings at CAA2 for local currency and CAA3 for foreign currency as the G20 Common Framework restructuring drags on. The agency said private creditors are expected to incur losses, with disputes over comparability of relief continuing to delay a deal with Euro bond holders. Despite economic reforms, Moody's noted that a rating change is unlikely until a comprehensive restructuring is completed and fiscal liquidity risks ease. In Ghana, the Securities and Exchange Commission has ordered local fund managers to scale back offshore investments to support the city and strengthen macroeconomic stability. Under a new directive, fund managers may invest a maximum of 20% of assets under management in foreign securities, while funds previously allowed full offshore exposure are now capped at 70%. The SEC said foreign investment will only be permitted in jurisdictions with information sharing agreements with Ghana, aligning with the country's IMF-backed reform program and President Mahama's push to keep capital within the domestic and regional economy. In other news, Algeria has initiated the termination of its air services agreement with the United Arab Emirates, originally signed in Abu Dhabi in May 2013. State media said the move requires formal notification to the UAE through diplomatic channels, with the ICAO Secretary General also being informed to undertake relevant procedures. Algerian outlets have recently criticized the UAE, accusing it of attempts to sow regional discord, though no official reason for the termination was provided. Meanwhile, from the heart of Cape Town, Africa Mining Indaba 2026 has gathered the continent's leading mining companies, investors, and policymakers. Running from 9th to 12th February at the Cape Town International Convention Center, the event showcases deals, partnerships, and strategies shaping Africa's mining future. Minister Gwede Mantashe delivered the welcome address highlighting South Africa's commitment to sustainable mining, investment opportunities, and the continent's role in global mineral markets. Let's listen.
It is therefore befitting that the theme of this year's Indaba is Stronger Together, Progress Through Partnership, which means it's not only governments that must work together, we must work with the private sector. I know that in Africa, working with the private sector is like taboo because it is our resources, we must own them and must run them. I'm a great believer of working with the private sector because together we can do more. Our resources can give us better results, but if we compete with one another, we are not going to achieve what we want to achieve. To us, this is not merely a slogan, it is a strategic imperative for Africa to act collectively. Speak in one voice, avoid destructive race to the bottom in our engagement with global powers investors. Let's not allow a situation where, when we talk with our colleagues from Europe, we talk to them as EU, but we talk to them as individual 54 countries. We're much weaker. My background is in the trade union movement. I know that when you are a worker alone, you are weaker against the employer. But once you form a union, at least you have a collective power to engage the employer. Same applies to the continent. This continent owes it to itself to unite, work together, talk to the outside world as one. It is therefore preferred.
In other news, the African Development Bank Group and Banque Internationale Arabe de Tunisie, BIET, signed a $50 million trade finance guarantee facility to boost trade finance and support Tunisia's private sector. The agreement, signed at BIET's headquarters in Tunis, aims to strengthen supply chains, improve access to essential goods, support local production, create jobs, and further the government's efforts to enhance the financial sector. Finally, on News Now, FDH Bank has received regulatory approval to rebrand EcoBank Mozambique as FDH Bank Mozambique effective February 20, 2026. The name change follows FDH Bank's acquisition process initiated in September 2025 and will be nominal only, with existing contract, services, and operations remaining unchanged, the group said on Monday. The bank noted the rebrand reflects its growth and commitment to delivering excellent service to customers and stakeholders. I am Melissa Enoch, and that's it on News Now this Monday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market updates.
Initially, as we became independent, we had most of our development thrust was from the West. But as we evolved, we have also benefited from investment and cooperation from countries like China. I think the premises upon which you construct your question, I don't think is perfect.
Not surprised.
Yes, Zimbabwe is a sovereign state.
Yes.
You understand? And we move on the basis that give us the best results of our resources. Whether it is relation with the West or the East, what is primarily important is what we ourselves as Zimbabweans are satisfied with. We don't need to please the West or please the East. We please ourselves.
Welcome back to Money Moves. Let's now go over to Grace for today's market update. Hello there again, Grace.
Thank you, Melissa. Let's now take a look at how the markets open trading for the week, starting off with the equities as usual. The NGX All-Share Index closed at the positive, up 1.30%, while the BROVM in Abidjan gained 1.37% to 377.58. The Nairobi Securities Exchange rose 0.60% to 203.94. In South Africa, the Johannesburg Stock Exchange slipped 0.34%, and in North Africa, Egypt's EGX 30 advanced 0.52% to 50,293.53, while Morocco's MASI was nearly flat, down 0.02%. Let's do a quick round on some of the Pan-African currencies. The rand strengthened 0.57% to 15.95 against the US dollar. The Egyptian pound rose 0.08% to 46.91, while the CFA franc eased 0.70% to 502.30. The Kenyan shilling gained 0.02% to 109.01. The Moroccan dirham fell 0.45% to 9.13, while the Nigerian naira weakened 0.69% to 1,356 naira 62 kobo as at 13:47 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude was flat, down 0.04% to $68.02. While US WTI slipped 0.05% to $63.51. Natural gas dropped 6.72% to $3.19, while Arabian gasoline rose 0.81% to $1.96 at 13:38 GMT. Now, finally, two soft prices. Cocoa fell 1.52% to $4,133. Coffee eased 0.50% to $287.80, and cotton gained 0.59% to $61.42. Palm oil added 0.39%, while sugar jumped 1.49% to $14.32 as at 13:42 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how trading opened for the first day of the week. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.